the real returns of real estate over the last 30 odd years have been positive. I think it's among the few asset classes that have actually given positive. Now, without getting into why this is so, as a result, my parents, people who are older than me, have this faith that just buy real estate, it will give you real returns, and frankly, a lot of people have grown their wealth through this asset class. On the flip side, frankly, the reason for this is over the last 30 years, the real interest rates in this country have been negative. As a result, all the saving mobilization that have happened and that has been channelized into starting from the financial institutions to the capital markets. Capital markets still has given a lot of, it has given real returns, but unfortunately it has been very volatile. I mean, there have been a lot of booms and bust cycles. So people have made money and then have lost money. As a result, real estate has become a dominant real returning asset class, and that's why people have a lot of faith. But it also has an inbuilt advantage: it's very liquid. Now, this is a disadvantage and an advantage. The advantage it has is it creates forced discipline on savings, because you don't have access to little bits of it. As a result, it forces you to save. So in essence, the flexibility that we have in other asset classes, it prevents people from having discipline in their savings. So as a result, in the last 30 years, this has become the single dominant asset class, which has outperformed all other asset classes. And frankly, now what we see is in the last 10 odd years, the central bank is becoming more and more autonomous. What we are seeing is that they're targeting real returns. As of now, we're seeing one of the highest real returns, real interest rates Pakistan has ever seen in the last 30 years. As a result, I think there is a structural shift that's going to happen. The savings behavior will change, and the returns that different asset classes have given over the last 20 years may be different in the next 10 years. So what we feel is the saving mobilization patterns will change. And as a result, I think the regulatory environment has also now enabling a lot of regulated institutions such as ourselves and our other competitors to offer real estate to the retailers through what we call a REIT structure. So as a result, a wider opportunity will be offered to the investors, and I think as a result there will be a behavioral change as well. And because now there will be other asset classes that will be competing with real estate, so the return profile, how savings should be distributed between different asset classes will change. The dominance that 80% of all our parent savings were targeted to a single asset class, I feel that number will shift downwards. And the liquid asset classes which have given negative real returns, where are now fundamentally they're aiming for real returns, there will be a gradual shift. And in that shift, because these are pledgeable, more liquid assets, I think there'll be real business activity that will also come as a consequence of it.